Oh my god, that lighting though. The TV's on in the background, but I like this ambiance.
What's up? Good morning. Welcome to the show. My name's David. After some technical difficulties, of course. So it is a Wednesday, and we're a couple days after earnings in GameStop, and due to some technical issues, I've been unavailable for the last couple of days. But I wanted to go back and kind of recap what happened on earnings, and since then, and let's look first at just the day of earnings, and let's take a look at that whole scene. Now, I did not play this the best way possible on earnings. So if you look here, you can see earnings is this day here. Now, they missed by like 20 cents. And so we had the stock down about $20, $25, and it opened down. You can see it down after the close, then it opened down and hit a low of 177. And my position was I was short. I was basically I had these condors on where, like, if it had opened unchanged, it would have been perfect for me. And if I had just not touched my position and just left it and done nothing, it was the perfect position to have on, because essentially by the end of the day we were pretty much unchanged here, you can see. However, with it way down here, I ended up actually adjusting my position, and in my mind we were going to zero, right? And so I was aggressively adjusting to stay short with the assumption that we were going to move lower, which was the wrong assumption, and instead of doing nothing and just letting it ride, if I'd let it ride, it would have come right back up to here to unchanged, and it would have been a perfect win. Instead, I adjusted my position down here and got short, and then it went right back up again. So I kind of botched the whole thing, unfortunately. But these things happen. I want to be honest with you and tell you what happened with trading. So anyway, so instead of making probably like $3,000 if I just left it and done nothing, I ended up probably losing like $1,000 on earnings, which was most unfortunate. You can see then the days after. So once everything kind of shook out, I essentially put condors back on again, which was basically saying like we're going to move nowhere. And this next day here, I believe was Friday, I bought some put spreads up here at the top, and then it went down, and I sold put spreads against it to be neutral. So I had a nice trading day this day, making back maybe $700 by getting short here and then covering hit here. And so I was flat going into Monday morning, and so this rally on Monday didn't really hurt me because I really had no directional risk. And then we move on to the rest of the week here. So I basically had condors on that basically make money if we don't really move, and we haven't really moved the last couple of days. So kind of a mixed bag here. Interesting, we did see a little sell-off in AMC over the last couple sessions. Let's pull up AMC here real quick. And after this building rally from 42, we were just kind of building every day. Up to 52, it just kind of fell apart and went back down to 44. And I think this makes sense. There's no real fundamental reason why AMC should be like rallying. The company still has to fight with history and the fact that it is a brick and mortar, mostly firm that in an industry which is kind of fading away. So that's kind of what they're dealing with there. I'm going to see if I can, while I'm talking to you here, I'm going to see if I can kind of adjust my filters here because my forehead's looking pretty shiny. Anyway, so it's nice to see you again. I have big plans for the channel coming into the fall here. I know things haven't been as productive as other times, but we are going to fix that, and I have a bunch of interviews and other fun stuff coming up for you very soon. As far as volatility goes, we've seen a rise in the VIX over the last few sessions. Let's take a look quickly at the VIX here, and you can see from 16, 17, we got up to 21. And if we take a look at the overall market, this is the E-minis, you can see the market selling off. So that makes sense, right? The VIX usually goes up when the market sells off, and we've seen a general sell-off over the last few sessions in the E-mini. But if we back this out to like a year view, it still doesn't look like much of a blip to the downside. It just looks like, you know, part of the road continuing higher. Now, we don't know if this will continue, but in general, the markets seemed like they always kind of rally. So not very concerned about the current sell-off in the grand scheme of things. We will continue to monitor that situation. We have seen volatility kind of firm up, which once again makes sense when we've got this little downtrend in the markets. E-minis today positive. If we look at the VVIX now, the VVIX is not an indicator that has all that much meaning as far as I'm concerned. We saw VVIX elevated for a long period last year. There was this sort of conventional people. It's like that number of 100 in people's minds is like this important thing, but that's just because of that even number, and it doesn't really apply as something super important here. If we look at the VVIX over a period of time, now the VVIX is essentially the volatility, the implied volatility of options on the VIX. So if you've got VIX options buyers, then VVIX is going to go higher. If you've got VIX options sellers, VVIX is going to go lower. But a lot of times we need to dig into the exact options trades to make any sense of this. So if I were to go to VIX here and then pick products, we could look at options trades, and we could go to time and sales and see what the big trades are. So for example, today it's showing the two biggest trades so far is somebody selling the October 23 calls, and that seems like a significant, it seems like a meaty significant trade, right? It's a decent premium, 255. So someone came in and sold 6,000 calls, but it's on a spread, right? So you can see, so we'd like to look and see, okay, what's the other side of that spread? So the way to do that would be, okay, we can see the timestamp for this 944. So if we go to 944, we can find the other side of the spread. So let's do that real quick here. So as we scroll down. All right, so here's the spread. And this makes a little more sense when we see the other side of the trade here. So it's 6,600, and what they did was they bought a vertical spread, right? They are buying the 21 call and they're selling the 23 call, right? So, and if we take a look at the difference in price, we've got 51 cents, right? 306 minus 250, 255. So they're paying 51 cents for this spread that could be at most worth $2, right? So that's when we first looked at this trade and we just saw the one side, it looked like it was somebody selling volatility. But when we dig in deeper and look at the spread, we see no, actually they're buying a spread. So they're buying, so they're betting basically the VIX is going to go higher here, right? They're paying 50 cents or 51 cents for a spread that could at most be worth $2, right? So if this does come through for them, they will make good money on that spread. And then the other thing we can do when we see something like this go up, and maybe I'm in the way a little bit. Let me move off the screen here for a second. So we can see where I'm highlighting here with the pointer. We've got them selling the 23 call 6,600 times and buying the 21 call. Now, the other thing we can do when we're evaluating a trade like this is we can go to the actual strike, and this is 20 October, and we can evaluate the open interest on the option. So we can try to see if maybe they're closing the spread instead of opening it. Maybe they had the opposite on and they're getting out of it now. Now, we can't tell that for sure, but looking at the open interest could give us some sort of clues. So let's go and check that out. So once again, to refresh your memory, this is the 20 October 23 call. So if we go to 20 October, it's this series right here. And I'm going to adjust my column so I can see open interest. And we can see right here the volume so far. And there's relatively high volume in all of these strikes, 39,000 in the 21 and 44,000 in the 23. So we can't really tell from this information if this is an opening or closing trade. If there was no volume in this, or if there's less volume than 6,000 overall open interest, then we could speculate that this was for sure opening trade. If there was exactly 6,600 in this strike, then we could speculate that this might be a closing trade. But because the open interest is so high here, we can't really make any sort of observation. What we do see here, though, is this 25 call also trading in size. So how would we figure out what this trade was in this 25 call? Well, one way to do that is we can go into time and sales and we can search out specific parameters. One parameter would be to search out just that series. So if we go to Oct20, we can see just that series. And then additionally, we could go in and say, okay, we only want calls. And we could go specifically to the strike. So we could say search for between the 25 strike and the 25 strike. And that would give us just trades on that specific strike. And when we do that, we see them selling this option. Well, it's several smaller trades, but it appears the major quantity is right here around 10:08 to 10:12, where they were selling this 25 call. So that gives us another piece of the puzzle. And I use time and sales and also open interest to try to figure out what's going on, not only in the VIX, but also in other stocks. So I would encourage you to use those tools to kind of give you more of an insight as to what's going on at any particular time. All right, so back to GME. Let's take a look at our Greeks here. You can see currently, I'm in the way again. Let me move myself out of the way here. So currently short 8 deltas, collecting $153 a day. We have a position here where we're basically just banking on this not moving all that much in the next couple weeks. If we look at the specific positions here in the front week, I was short the 190, 180 put spread just once, and I've bought a little bit of just downside protection here, just in case the end of the world happens. I was able to buy this 170, 145 put vertical very cheap, and that just kind of would limit the pain if we were to just tank in the next couple of days. In addition to that, we are short here in next week's expiration. We do have this kind of extended condor on, so if I switch this to show the numbers here, we can see and basically I'm short call spreads, out of the money call spreads, I'm long out of the money put spreads, and I'm long in the money put spreads, and I'm short out of the money put spreads. So we have this kind of bullseye area between 200 and 185. And if we kind of just, as long as we sit in that range, we collect money every day. So it's showing us collecting $150 every day. And so far, we've just been hanging out kind of in that range. For a while, we had these Jan 9100 put spread on, and I did get out of that a couple of days ago, and I'm kind of glad I have, because it has really gone down a lot in value. Remember, we were messing around with this around the $2 range about a week ago. Now it's showing 140 as the midpoint. At one point yesterday, it was showing $1. So it was the midpoint of this 9100 put spread was $1. So it had gone down by 50% with the stock hardly moving. And that's just due to volatility coming in after earnings. Remember, once earnings are out, the overall option prices go down across the board. They're going to go down more in the front, closer months to expiration, but even in the farther months, you're going to see stuff go down. And this has been the nature of these meme stocks has been that when it's kind of been the opposite of quote unquote normal stocks, in that when they start to rally a lot, volatility seems to go up, and when they sell off, volatility has tended to come in a little bit. And I think that speaks to the fact that it's just not a real rational, normal occurrence for these things to just go straight up when there's no fundamentals really supporting those rallies. And I think the fact that volatility does expand as these go higher and contract as they go lower speaks to that, and is kind of in contradiction to the narrative that is being put forth by the Reddit guy, saying, "Oh, well, this is going to be, it's going to behave like a cryptocurrency, and it's going to rally to 50,000, 100,000." These kind of irrational expectations of many people with the meme stocks here. And we can see AMC, to use a crypto term, we got the rug pull, right? A lot of cryptos, they will announce a new crypto and a new cryptocurrency, and many people will buy it. It will rally like crazy, have great returns for a certain period of time, and then it will just go right back down again. We saw that to a lesser extent in AMC over the last couple of days, where it got up to 53, I believe, and now it's back to 44. Now, it hasn't gone all the way back down. I can speculate that this will go at some point back through the 30 strike. It hasn't done that all the way yet, but it has had a significant quote-unquote rug pull from 54 to 44. If we look at GME, here's the chart over a long period of time. Now, my speculation is that this is going to move lower at some point, just because it is at such a high multiple from where it was pre all of this hype, and we're still seeing, it's a company that's losing money and does not have a great game plan. The earnings, just to go back to the earnings again, the earnings conference call did not give a whole lot of detail. There's speculation that this company is going to expand their brick and mortar to include peripheral hardware, all kinds of other types of electronic hardware in their stores. But a game plan to transition from a sort of failing industry to something else has not been really laid out. We know that, the two real positive things that we know about are A, the fact that the stock has rallied so much has allowed the company to get out of debt. They've floated new shares, they've gotten out of debt, and they've been able to attract some great talent. But beyond that, there's not a lot of positivity, and yet the stock price has gone to the moon and is still at the moon right now. So I'm anticipating this to make a move back through 150 at some point. I just don't know when, and to just stay constantly short has not worked, right? So we'll see what happens moving forward. But the more this rallies, the more I'm inclined to be short it. Because I am anticipating some sort of rug pull at some point soon. But in the meantime, having no real directional opinion and just taking advantage of the fact that options volatility is relatively high here with 100 vol plus in most of the options, this theta of 150 a day. Right now we're showing theta of 160 a day. And the delta is very manageable at short 13 right now, and it's just been sitting at one spot. But we haven't really seen that theta of 160 a day come to fruition, and we could be in a situation where we're collecting money every day, and then it makes a big move. Remember, we had a move of up $45 a few weeks ago, and something like that is going to give up your profits pretty quickly. We can see this chart here is a risk profile showing that stock staying in the area between 180 and about 215 we're profitable collecting money, and outside that area things get bleaker and bleaker as time goes by. Now the profile here that we're showing in the bottom is for a 40 or 50% move one way or another, which is pretty much the outside bad things that could happen. You can see the position losing $6,000 for a 40% move up. For a 47% move up, you can see it losing $5,900 and $4,400 for a 56% move down. Now that's the risk we have on right there. To collect $150 a day, you have to take risk, right? That's the whole game of trading is to make money, you have to take risk. And the key is to figure out kind of more sensible risks to take. There's no trade that's going to make you successful without taking some sort of risk. And we can see the P&L bounces around a lot here because there are several kind of strikes in play, and the markets are fairly wide. So you can see right now the P&L, an hour ago it was saying 12,800. Now it's showing 11,800. Not that a whole much has changed, right? We've rallied $1 maybe, but that's just kind of the nature of this position is P&L moves around. We know that if you've got theta of 150 a day, over time you're going to make money if it doesn't move. It's just the way it is. But the P&L bounces around. Right now it just bounced from 11.8 to 12.2. And so that's something that you just have to be comfortable with if you're going to trade this sort of situation, is that P&L is going to bounce around a little bit. But we do know that this will work. If the stock stays still, we will make money every day over time. It's just if you look at it in a snapshot, it doesn't appear to happen sometimes just within one day. And we have been hanging around this 200 level. Now, I do have some concern that we could move higher from here before we move lower. So that's why I've been a little bit cautious. I'm not just mega short. And, in my mind, I thought we were going to sell off in May, right? And it's been, now we're in September and we're still hanging out at 200. So not really what I had expected. Anyway, so that's kind of where we are. Thanks for checking in with me. I know it's been, like I said, things have been a bit sporadic, but I promise you things will be better moving forward. All right, so that's kind of where we are. I appreciate everybody watching and everybody's comments. If you want to support the channel, please consider doing so by signing up with Patreon or with our membership program. All of that is appreciated, and we'll see what happens. Just kind of hanging in orbit here with GME. as the market has very little going on today. E-mini is currently up 4, NASDAQ down 47, Dow up 69. Let's take a look at just major news headlines before I leave you here. I'm going to go to drudgereport.com. And Newsom wins in blowout in California. Now, is that a recall election? Yes. So they tried to get rid of Newsom in California in a recall election, but that was unsuccessful. As far as major stock news, what we can do is, and I like to do this sometimes, is to go in, and if we go into the watch list here, we can see top 10% gain NASDAQ. And a lot of times this will be some like small stock that nobody knows about. But we've got BTCS up from, it looks like 50 cents to $8. But that's quite a move. Let's see what BTCS is. BTCS stock. And the other way we can look at this is pull up the news stories here. So this is a blockchain technology-focused company announced that the NASDAQ stock market has approved the listing of the company's common stock on the NASDAQ. The company's common stock will begin trading on NASDAQ under the trading symbol BTCS at the opening of the market. So essentially it just got listed. I guess these numbers, so these are over the counter. This is over the counter chart, and the NASDAQ, as soon as it's listed on the NASDAQ, it's up here. So it looks like it got up to 11. So this has just been listed. We can go down here and see this 36 stock moving today, pre-market. But let's go back to, let's get rid of this. Let's go back to our top 10, and we can see some other ones here. Tyra, Bioscience. Let's switch to the New York Stock Exchange percent gainers. Sandridge Energy. So not a whole lot of names that I know or really recognize here moving forward. So I'm going to switch back to my current list. And we can check in on the VIX term structure really quick here, which is looking the way it's looked kind of for a long time here with 10% contango here. In the front week here. And that's it looks very normal, the VIX term structure. So these products will continue to decay. If we look at UVXY, we can see that it's had a little pop recently, but this will continue to decay, and it's being short these products has been productive all summer, and it appears that it will continue to do so. You see it like a sideways movement on UVXY. However, over time, that 10% contango is going to pull this lower, even if the VIX stays firm. Even if the VIX stays, let's say here where it is at 1973, the force of contango will pull this lower. The VIX trade has been a profitable one, being shorted for some time now, and it has acted very quote-unquote normally with a decent level of contango for some time. And there's no reason to believe that won't continue to be the case. All right, so I'm going to let you go now. Thanks so much for watching me. Let's see, after inflation, maybe next week, is it better? Mongoose, I don't know what that means. All right, hey, what's up, Christina? Thanks for watching. Thanks, Gamer, for watching. I will see y'all next time. Ciao.